You think the prop firm is your partner. You think they want you to succeed, to manage their capital, and to split the profits. But the math tells a different story. The reality is that for most firms, the trading isn't the product. You are the product. Today, we are stripping away the marketing hype. We are going to look at the payout illusion, the specific psychological mechanism designed to make you fail, even when your strategy is actually profitable. Welcome to JTA. Let's get clarity. To understand why you fail, you have to understand how they make money. Most prop firms operate on a simple statistical probability. 96% of traders will never reach a payout. They collect the evaluation fees from the 96% and pay out the successful 4% from that pool. It is not a hedge fund model. It is an insurance model. They are betting against your psychology. They know that even if you can read a chart, you probably cannot handle the pressure of the evaluation phase. The first tool they use against you is urgency. When you trade your own money, you can wait for the perfect setup. If the market is choppy for 2 weeks, you sit on your hands. But in a challenge, you feel the invisible clock ticking. You force trades because you need to hit a profit target percentage. This forces you to over-leverage. It forces you to trade during low-probability conditions. They force you to abandon the one thing that makes a trader successful: patience. Gambling psychologists call this the near miss. You almost passed. You were up 4%, then you slid back down. The firm offers you a reset for a lower fee. You think, I was so close, I just need one more try. This is the payout illusion. You are chasing the feeling of being funded rather than focusing on the process of trading. Every time you hit reset, you are feeding the machine. You are validating their business model with your lack of discipline. So, how do you beat a game that is rigged against your psychology? You stop playing their game and you start playing yours. First, ignore the profit target. Focus solely on the drawdown limit. If you protect the downside, the upside takes care of itself eventually. Second, reduce your risk per trade. If you usually risk 1%, drop it to 0.5% during a challenge. Why? Because it buys you psychological space. It stops the panic when you take 2 losses in a row. Third, detach from the outcome. The goal isn't the certificate. The goal is executing your system perfectly, 100 times in a row. The prop firm is just a tool. It is leverage, nothing more. Don't let the illusion of a big payout destroy your real trading edge. Stop chasing the hype. Start managing the risk. If you want real clarity on the markets without the noise, make sure you are subscribed. I'll see you in the next one.